Hi, it's Josh Young, and this is a review of the 8 ideas that I've shared so far via Bison Insights, as well as a look forward to 2026 for those ideas, as well as for oil and gas markets. So, important disclaimer, none of this is an offer, solicitation, or recommendation. Um, any returns shown are not meant to be indicative and are purely illustrative, and past performance is not indicative of future results. So, a little about Bison Insights. I launched it in August of 2025, and so far I've shared 8 different oil and gas ideas, and so far they've done really well. Actually, one of them has done spectacularly well, and it's been pretty fun to share them and try to highlight what I'm seeing in these different companies and what may drive substantial outperformance by them over time versus the broader sector. And I think it's been really helpful to share these ideas and get feedback and to help educate folks on the energy sector. And I'm happy to be able to get to do it. So today I'm going to share some background on Bison Insights, some thoughts on the macro, and then walk through the 8 ideas that I've shared so far on a no names basis. So, a little background on me. If you're watching this, you're probably familiar with this, but just in case you aren't. So, my day job is running a oil and gas public equity investment firm. And none of this, again, is an offer or solicitation or anything for that. I just think it's helpful to know who I am and what I do. And that firm has done really well over the last decade and a half versus um, its essentially benchmarks, which are the indexes and ETFs available to be able to get exposure in the oil and gas sector. And so it's been really great to get to do that. And one of the caveats there is that that's only available to accredited investors. And again, this isn't a solicitation or anything like that. It's just helpful, I think, to share what I do in my essentially day job and how well I've done with that, both for that strategy that I've been running, which has materially outperformed versus the index it's most commonly compared to, as well as various other energy indexes. And also where I was chairman of the board of a publicly traded Canadian oil and gas company from 2017 to 2018, which substantially outperformed itself versus its peers in that time frame. So that's just a little about me and a little about my background and what I spend my time doing when I'm not writing for Bison Insights. And I thought I'd share a couple of examples that I think help highlight why I launched Bison Insights. So beyond just offering something that people can look at and take advantage of who aren't accredited investors, um, also, I've found that where I've shared really interesting public equity ideas in the public venue, whether it's via Seeking Alpha or on Twitter or various other places that people do talk about stocks and other ideas, there's been quite a bit of confusion and sometimes it's not so clear what I or anyone else owns or doesn't own or what they think or whatever. And so I found having sort of one spot where any stock that I talk about, I've talked about it publicly there in that spot, and I keep those thoughts up to date. And then there's no question about, hey, do you own this? Do you like this? Do you not? Whatever. I talk about it on Bison Insights. And so one example is Baytex, which was a fantastic idea. I shared it on Seeking Alpha. I owned it, and funds I advised owned it, and it did really, really well. And I shared that I owned it, and I talked about it on Seeking Alpha, and I talked about it on Bloomberg and various other spots, BNN. Um, and then as the stock materially outperformed versus its peers, it became less attractive to me. I'm looking for companies that have the potential to significantly outperform versus the broader market and versus oil and gas stocks. And I'm not always successful. In many cases, I'm not successful, but that's what I'm looking for. And so when I own something like Baytex and it does really, really well, and the fundamentals start to do less well, but the stock has done great, at some point it makes sense for me to sell the stock and go redeploy capital into other opportunities that I see as potentially outperforming. And so I sold Baytex and I talked about it publicly. And I don't think the company was so happy that I talked about it. And I got a lot of pushback at the time. But oddly, still, I get questions, hey, what do you think about Baytex? Or how come you don't own it? Or don't you own it? Look, it's down or up or whatever. And, I think just I'll still get those sorts of questions on every idea I share, I'm sure. But I think it's helpful to be able to say, hey, if you want to know of the stocks that I've talked about, what I own and what I think about it, just look at Bison Insights. I think it's a lot sort of simpler. And again, no one should follow me into stocks or whatever because I talk about them. I think it's highly risky to sort of rent investment theses and ideas. But I think to the extent that you're interested in what I think or what I own and why and so on, I think it's helpful to have one sort of a single source of truth, a single sort of spot to check to see what I think if you're interested. And so that's one reason to have launched Bison Insights. And again, so far I think it's been really constructive when I get asked, which happens almost daily, hey, what do you like, what do you own, etc., or specific names, hey, look at this, here's where I'm talking about this stuff, let me know what you think, and then basing conversations from there. Similarly, there was a public company that had an ultra aggressive investor relations scheme going on or program going on. And when I asked some questions publicly, I got a lot of pushback. And so I shared my thoughts on the company and my analysis of its fundamental value at the time on Seeking Alpha as well as on Twitter and got a wild amount of pushback. And actually, it is sort of strange. There's a few folks that operate either under pseudonyms or under their own names or are involved in various other sorts of weird sort of securities related stuff that truly seem to dislike me. And it appears that as I sort of trace back, hey, what's going on with each of these things, it's either a pantheon or it's something similar to pantheon that sort of triggered them. And so, life is short, and it doesn't make a lot of sense, I think, to get in fights with a ton of different people. And the people that do these sorts of aggressive, questionable stock promotes tend to be sort of the most aggressive. And I could speculate as to why, but I won't. And so my thought is, as I find, which so far in the 6 months or so that I've been doing this Bison Insights, I haven't had one that's been so compelling. But as I find companies like Pantheon in the future, where I think their promotion is questionable and where my view of their value is extremely different from what's being disseminated on social media or via, either paid for or independent investment research and so on. Bison Insights, I think, is a really good place to share that. And I think it's been really helpful to be able to sort of focus in on something, hey, what are my best ideas? And then sort of being quiet on almost everything else in oil and gas and elsewhere. One, to improve the research quality and my focus on those ideas, and then two, to sort of filter out some of this noise around sort of the pantheons of the world and similar things. And again, it is sort of wild in terms of the pushback on this one that I got, all kinds of name calling, all kinds of other stuff. And then, here it is. Most of those people have disappeared. Some of them still call me names and so on under different pseudonyms or whatever. Again, whatever. It's sort of the nature of being a public figure. And here the stock is down 88% from my Seeking Alpha article highlighting the extreme overvaluation. Incidentally, I pointed out that it was about 95% overvalued at the time, and it's down 88%. So I was off slightly, but hey, directionally correct. And what a absolutely crazy story. And and none of this is to say, who knows, maybe they'll hit oil and the stock will go up a lot from here. I have no strong view here. I'm not involved in it. I've never shorted it. I never owned it. I just think it's interesting and think it's helpful to share what's been going on in the world and what's been going on with different specific ideas and things I've talked about that would motivate launching a newsletter to again be sort of a single source of truth in terms of publicly traded stocks that I talk about talking about them in the public domain exclusively via Bison Insights, occasionally on podcasts or so on, but only things that are within that Bison Insights coverage. So I thought it made sense to talk a little about the oil and gas market and sort of what I'm seeing and why I'm excited for 2026 and beyond, both for the specific names that I've talked about and will likely talk about on Bison Insights in 2025 and into 2026, as well as for the broader market. So the oil rig count's down a lot in the US. The oil price is down a lot. Oil stocks crashed earlier in the year. They've rebounded to some extent, but they're still materially lagging the market. Historically, when the rig count falls, when oil stocks fall, um, there's been enormous returns in the subsequent periods. And this time may be different, but generally speaking, I've found that betting that this time is not different has been the winning bet from a macro perspective. Um, from a natural gas perspective, I've been extremely bullish on natural gas from a very low point around a year ago. And so far, so good. Natural gas prices have essentially doubled from the point that I got very vocally bullish on them uh, around this time in 2024 and early 2025. My thesis is driven by two factors. One is that LNG facilities are getting built and coming on very rapidly here in the US and in Canada, and that is taking a lot of pressure the off the market in North America and allowing prices to trade closer to the international price. And then secondarily, there's been a very rapid building boom in AI focused data centers, which so far have had a limited impact on actual natural gas consumption. But as they scale and as a lot of the projects that have been either in planning or under construction get turned on, there's the potential for a meaningful inflection higher in natural gas demand here in the US and in Canada. And so the combination of those two factors, along with falling well productivity on a per foot basis, which I think is the prelude to overall falling well productivity, um, is very promising for the US and for the Canadian natural gas markets. And I think there's a lot of upside from the point where I got so excited about gas last year, and there's moderate upside to the natural gas price from here, from these two factors. I think some of this is already priced in, but this should also be a helpful driver of a potential floor to a certain extent for natural gas prices. And so far, actually, this winter has been pretty mild relative to history, and so natural gas demand has been somewhat subdued versus past winters to this point at the end of December. And so it is noteworthy that natural gas prices have held in there pretty strong despite a pretty weak winter, and natural gas is used for heating demand and power demand, and typically is very much in demand in a cold winter and much less in demand in a warm winter. So despite the relatively warm winter, natural gas prices are actually still hanging in there pretty well. And again, that's pretty promising. And it's very promising, I think, for certain producers and services companies that have a lot of exposure that I think the market is overlooking. And then there's been a boom in commodity prices, particularly on the precious metals side. And there's been also a boom in the shares of these mining companies. And I think this is relevant both as a analogy where these are things that are similar to oil and gas producers and services companies, and because the share prices of the companies in the GDX and GDXJ ETFs, as well as in the silver ETFs and various other precious metals, and now starting to bleed over into various metals outside of precious metals. As those shares rise, those companies issue shares and also just reinvest more and more of their cash flow into expanding mines and building new mines, which is very oil demand intensive. So this is both relevant because oil and gas stocks may follow a path similar to what GDX did, which is underperformance for a decade essentially by a lot, and then a rapid re-rate higher. Um, and or they may benefit from the increased demand for oil from the gold miners and other miners, which could um, over a multi-year period lead to demand growth of potentially over 1 million barrels a day, which would represent close to 1% of global oil demand just from a sector that before I talked about it, there was literally no one talking about how booming mining demand was going to lead to more, booming mining activity was going to lead to more oil demand. So pretty promising. And when people say, hey, oil and gas stocks have done poorly and so on, and people hate them and complain about them and so on, I just point to these gold miners and to what the sentiment and narrative was around them 18 months ago at a point where they had materially underperformed the market and had only very modestly outperformed versus oil and gas stocks. So I'm going to go through very briefly the 8 ideas that I've shared so far. Again, on a no names basis, it may be possible to tell one or two of these through some of the stuff I talk about, and that's fine. The goal on this is to try to preserve the value for subscribers, as well as to preserve the idea around these things being available at Bison Insights and to not have hard feelings of, hey, I sell idea number 4 or 5 or whatever, just making it up, and tell the Bison Insights subscribers, hey, I've sold that one, and then 6 months later, someone had figured out I owned that thing, but they didn't sell it, and then it goes down a lot, and so on. Just trying to avoid hard feelings and try to have sort of this single source where I'm talking about these things and sharing them, and where it's just very, very clear, hey, you own this or you don't, you talked about it here, here's why you said it, and that's helpful for me to learn more and understand what's going on in the oil markets and so on. So that's the concept. So again, they've done really well. A couple of them have done extraordinarily well, which is great. And a few of them haven't yet. And those are our newer ideas. Ideas 6 through 8 were shared in the last 6 weeks or so. So hopefully over time they start to materially outperform. And there's going to be some of these that are going to underperform over time. And I really hope that no one listening to this thinks, hey, Josh thinks that all his ideas are going to outperform the way that idea number 2 did, where it's up 500% versus the oil market or oil stocks up 2% since it was shared. That's really extreme and it's fantastic. But I hope that over time, the majority of these end up outperforming versus XOP, and that they also end up outperforming versus the broader stock market. And, we'll see, and no one, of course, should rely on that. So the first one, I called this one sort of informally easy to value, hard to buy. Great producer, drilling huge wells, trading at a big discount, but the stock's hard to buy. So very cheap versus comps, growing really fast, really excited, and this thing has materially outperformed, and it may outperform more. And not a lot else to say about it. Just like it. It's going great. No plans on selling this anytime soon. There were rumors that the company might have gotten bought out a few months ago. Fortunately, it didn't happen. I don't want it to sell. I want them to keep drilling enormous gas wells and to benefit from that gas macro thesis that I shared just now. Next one, these are related securities of a natural gas producer, and I own them partly as a hedge for that producer because there's a possibility that these things win and that producers' shares fall, at least temporarily, because of a legal issue. And so far, they've done great. And there's also some extra right tail optionality where if natural gas prices, if the rest of the winter ends up really cold and natural gas ends up at like $10 instead of at the 4 or so that it's at right now, and it stays persistently high because of undersupply and so on, this thing could go up a lot, and these related securities could go up a lot fundamentally outside of the sort of specific catalyst that we're looking for. So there's multiple paths to win. There's a real risk of a 0, and so far they've done great. Frankly, it's it's nice to have written about something like this. It was a great idea, and hopefully I find one or two more of these. But who knows? I mean, an up 500% in 6 months is sort of a once in a lifetime sort of thing. Um, so the next one's a company with a high dividend yield and a lot of cash on the balance sheet, and sort of unclear what they're going to do, whether they're going to sell the company or whether they're going to reinvest in their high performing wells. But this one has a lot of potential upside to natural gas prices and to a lesser extent to oil prices, and it has a very large land position. I like these sorts of things where relatively small market cap but huge land position. Many people are really snooty about their position, sort of similar to that first company where they'll say, oh, hey, that land is worthless or it's only worth a little or whatever. Here's these wells that were drilled 10 years ago that were bad. Even though wells are getting a little less good on a per foot basis from where they were a few years ago, generally shale wells are way better than they were a decade or 12 years ago or whatever. And so there's a lot of land out there that does have productivity potential. And it's part of why I think natural gas prices might get to 5, but I think it's unlikely that they go to 10 and stay there for a multi-year period, is because of companies like this sitting on comparatively large land positions with the capital available to go rapidly develop those land positions to the extent that prices dictated it. So again, it's really fun to own something that just pays you tons of money over time. And this one feels very asymmetric. It's a large position for me, and I started tweeting every quarter as they pay their dividend. And it's just I'm not really a dividend investor, but it's pretty fun to get these dividends. And maybe I need to either own more of this one or own more of other companies that pay really high dividends. Um, so this next one is a sort of pretty simple Miller Modigliani shuffle, as one of my friends came up with a while ago. Basically, as you pay down debt, if your cash flow potential is sustained and if your business value is sustained, in theory, your market cap should rise by the amount of debt that you pay down. And this one has the potential for a multiple times return as they pay off their debt organically over the next few years. They've refinanced their debt recently. They're fine from a debt perspective. They have less than 2 times debt to cash flow, despite being in the services business. At a pretty tough spot where the rig count has fallen a lot, and it may fall more or it may start to rise. I'm optimistic, but this thing is set up to do pretty well, I think, under a variety of circumstances. And this one could be another big dividend payer to the extent that they experience a recovery, or even just in a few years, even if things just stay terrible for them for a long time, which is unlikely for a cyclical. But if they do stay terrible, they're still slowly paying off their debt, and there's a decent chance that they end up turning on a pretty high dividend that's very well covered by their cash flow while continuing to pay off debt, potentially in the 2027 time period. This one is probably familiar to you if you followed my work in the past. And basically, I like to find companies that have a lot of essentially core value or a margin of safety. They have sort of a base business that's worth a decent amount of money, and maybe you get to buy it at a discount to that and get sort of other aspects for free. And in this case, there's a power business that's growing, that's been extremely delayed, but that should eventually come on. And that power business could be worth almost the entire market capitalization of this company. And then they have a shale play that's getting better and better, that they're a non-operated partner in, and their operator is fantastic and keeps making the wells better and better. And just the shale play is probably worth more than the entire market cap of the company. And then the power generation could be worth more. And then they have these base assets that they're slowly selling off and producing off and so on to help fund their growth projects. And so, there's sort of extreme asymmetry on this one of my largest positions. Like it a lot. I've talked about it a lot. And, I think 2026 will be a great year for it. 25 has been a great year for it, and more to come, I think. So this next one, there's there's some companies, sort of like that last one, where they're perceived as being in one business, but the reality is that a lot of their upside is from a different business. And so this one has an infrastructure component and an oilfield services component, and it trades like an oilfield services company, at a very depressed multiple and at a very large discount to replacement cost and a very high free cash flow yield and so on. But its infrastructure business is booming and is extremely valuable. And so, I mean, I like the oilfield services business and I like having that potential upside, but I also like sort of this good co, bad co type framework where the reality is, from a financial perspective, right now, the oilfield services business is the bad co and the infrastructure business is the good co, and probably actually worth more than the entire company right now. And I valued it very conservatively in this Bison Insights write up, but I think that as that business grows, as their infrastructure business grows, it could really end up being worth potentially even a multiple of what the stock trades at. And then they also have this oilfield services large division, which, as that turns around and starts to show positive cash flow growth and margin improvement, I think could be a real driver of further outperformance for this stock. And then this one is a little bit larger than a typical company that I'm interested in or I'm likely to talk about or own or so on. But it's really misunderstood. And it's sort of weird how poorly I think people understand it, and how easy it was for various folks in the public domain to be extremely negative or dismissive of this company and its prospects and likelihood of continued turnaround. Essentially, they've already accomplished the hardest parts of their turnaround. They have decades of reserves. They have a really high value non-producing business, more on the infrastructure side, and they're extremely similar to a peer that has seen massive outperformance, and their stock has lagged. And so, this is a relatively small position for me just because it's a big company, and I think it should do well and it has a lot of upside, but it isn't quite as juicy as some of these other smaller names that I've talked about. But for the folks that are looking for a bigger company to look at that's more liquid and so on, I think they'd find this particularly interesting. I think you'd find it very interesting. And if you really like dividends, if you really like companies that have accomplished these sorts of very complicated, difficult turnarounds and are positioned for multiple years of essentially financial and operating benefits from having already done the hard work without it being priced in, at least versus its peers, I think this idea, is going to be very compelling to you, and you may find my perspective on it educational and informative. And then the last one, wrote about this pretty recently. If you look at the chart at the bottom of this, you can see that I tend to not like to take a lot of initial upfront risk, and then I try to not buy into hype. And so generally, I forget the name of this sort of chart, but the price chart for this company, that's a offshore, essentially exploration and development company, focused mostly on oil. Sorry, not producing, but oriented towards eventually producing oil. It sort of follows the hype cycle. And so I followed this for a long time. They had fantastic success. They had substantial disappointment. After writing about this, it's pretty funny. Some of the largest holders and various other folks who were very aggressively promoting this or very involved in it or whatever through this cycle, they shared their thoughts and their hopes and expectations and so on for the name. And what I find compelling is getting to buy something where they probably, on a normalized basis to $1 a share starting at their financing a couple years ago, there's probably $10 of value in this thing between carried interest from oil majors that are carrying them on wells and fields that they could potentially sell at the right time for high prices and that they could farm out and so on. There's a lot of sort of intrinsic value here. There's a lot of potential liquidation value here. there's a lot of risk, which is that it doesn't actually produce anything and it bleeds cash. So they could run out of money at some point, and it could have various other issues. But there's a lot of intrinsic value, and then there's a lot of upside both to potentially higher oil prices as well as to further success. And so I just like getting to buy a stock after essentially all of the good news is priced out due to problems that are relatively temporary. And I think part of the problem for the company is that when it went from 1 to 10, maybe it was only worth 4 at the time. And so getting to buy it at 2 or 2 and change is pretty exciting to me because, hey, maybe it's only worth 4, or maybe it's worth 10, or maybe the people that were really excited about it when it went to 9.13, essentially, again, on a normalized basis at its peak, maybe it really is worth 40, and getting in at 273 is really exciting. And again, these are not the exact share prices. This is not, we reset the scale to 2023. But I think it's really interesting. I think there's a lot of upside in this one. I think people are very emotional about it, which is weird. And I guess people get emotional about all kinds of stocks, but when you own it, if you bought it at 9 and you just sold it, you're going to feel real bad if it goes back to 9. And then if you bought it at 1 and then it went to 9 and then it went to 3 and you didn't sell any, you're also potentially going to feel really weird or bad about it. So anyway, I like this sort of setup. I think there's a lot of potential upside. I think there's been real capitulation. There's a reality, which is this thing could go to 2 or 1 or whatever, and then potentially never recover, or potentially go to 10 or 20 or whatever. And so I think the expected value on this is really substantial. I got some help in evaluating it from a subject matter expert who personally invested in this too. And I think that was helpful in giving me the conviction to make this a position at all. And this is one where I view it as potentially a 10x, potentially a 20x, and very easily could be a 0. So I'm going to talk probably more about companies like this in the future, just because there are a number of these sorts of opportunities. And I think people tend to be very afraid of owning things that could go to 0. And what I found is that owning a basket of things that could 10x or go to 0, if it's carefully constructed, it has sometimes led to material outperformance and may lead to that outperformance in the future, but there can be no assurances of that. And on that note, just running through this disclaimer one more time, this is not an offer, a solicitation, or a recommendation for any sort of securities. I showed returns previously. They were not meant as any sort of solicitation. They were just meant as background. I showed performance of different ideas. Those were meant to be illustrative and not indicative. No individual person may have achieved those specific returns. And again, the goal of all of this is to help educate folks on oil and gas markets, to share what I'm doing and how I approach things. And all of these materials and everything that I write, these are my words, they're my ideas, they're not associated with any other firm or any other person, and I'm writing them under this Bison Insights umbrella. And so if you're already a subscriber, I really appreciate it. If you're not a subscriber yet, I'd love it if you signed up. And if you're not signed up even as a free subscriber, please come to bisoninsights.info and get on our mailing list. And I share intermittent free oil and gas macro thoughts. Occasionally I'll drop a paywall on an idea after it's been shared for a while. Share various other thoughts to free subscribers too. And so far these 8 ideas have done great. There can be no assurances of future performance, but it's been really fun to share them. It's been really fun to write this. And I appreciate your time in listening to this and watching it. And I hope you have a great new year. And I'll look forward to connecting in 2026. Take care.